August 13th, 1979, Business Week cover article, The Death of Equities. I started in the business in 1976 with Merrill Lynch, and I can tell you that the stock market was not very popular. You know, the market peaked in 1966 at 1,000, then dropped to about 500 in 1974, did not get back above 1,000 again until 1982. But what's interesting about this article, this cover magazine article, was it was basically saying that, you know, the stock market was finished, that there was no way anybody was going to make any money, the death of equities. Well, if you look at the graph of what happened after that, this is 1981 right here, 79 would be back here. We lifted off in 82, and then the market proceeded to climb 1,065% by the year 2000. So the point of the article was that usually the best time to buy stocks is when things are really bad but are improving. So like here's another graph that I thought was interesting. This is the Purchasing Managers Composite Index. You can see that, you know, because of the virus problem, big drop in the Purchasing Managers Composite Index, but it is starting to show some improvement. So like we say, it's best to buy stocks when things are starting to improve, which we're seeing in the graphs. This is the Nasdaq, as you can see. This is the daily graph. We are, above both moving averages. Lower moving averages turned up. It looks like a resumption of the bull market, and hopefully this is the final low that we'll have to deal with. We may never ever see this low again, just like we'll never see 1,000 again back in 1982. Same concept. This is the weekly graph. Again, we are in the Nasdaq is currently 7 weeks above the 35-week moving average. 35-week moving average has turned up. This is very positive. Small cap still, this is a monthly graph. As you know, that we take the 10-month versus 20-month moving average. We're still on a death cross. However, we did see somewhat of a bounce in the small caps this week. Now, as you can see with the SP 500, we continue to be on a monthly basis on a very positive uptrend. The index is actually back above 3,000, which puts it back above the upper moving average, as well as that's the same as basically the 200-day moving average. We'll see that in just a minute. Nasdaq continues to be the strongest index, as you can well see. Let's see if I can fix that. Anyway, as you can see here, the Nasdaq has definitely taken the lead here, very close to making an all-time new high. So the Nasdaq has been incredibly strong. However, there's another concept out there called reversion to the mean, which we'll talk about as well. Let's see now. Now, China, we're continuing to see China improving, not really breaking out in any major way, but seems to be steady. This is a very impressive graph. However, I want to point out that we did get a turn down in the aggression index. Now remember, this is a ratio of the technology stocks to the consumer staple stocks. The Nasdaq has been really red hot, and as you can see, it's kind of sort of cooling down this week somewhat. Now on a weekly basis, we're still on a buy signal because that lower moving average has turned up. Now, on the three economic indicators we're just keeping an eye on, again, interest rates just continue to be flat as a pancake. Oil is turning up. We're seeing the West Texas turning up. Now, remember, this is the 200-day moving average, which is always important. This is the small caps. Again, we're seeing a rally in the small caps. That's very positive. This is the PutCall Ratio, where we're measuring fear and greed. Lots of fear, coming back to normal. Now we're starting to get into greed, and we're starting to see where the market's going through rotation and somewhat of a correction. It's all pretty much expected. Here's the S&P 500 on a daily basis. As you can see, we've got the golden cross, continues to be above the moving average, but the most important thing here is we broke above the 200-day moving average on the S&P 500 this week, which is above 3,000. Now, if you go back and look at these bottoming studies we've been talking about, once you get above that 200-day moving average, you've pretty much could say historically that the lows have been put in. New lows, in fact, this is the new lows on the New York Stock Exchange. Very few, under control, no problem. This is another way to look at the aggression index. This is where we're taking discretionary spending. We're talking about retail spending, retail stocks, things like Lululemon, things that are discretionary that you don't have to have. It's not like toothpaste. Then we're doing that as comparing it to the SP 500. So the data is improving here. We're seeing a major move here in stocks that have been underperforming for since March. Now we're going to get into the top 5. Now remember, the top 5 is not a buy list. This is a watch list. What we're doing is we're taking our database and taking the strongest stocks in the database based on performance. However, they're not biased. Now we no longer own Dexcom. We did at one time. As you can see, the stock is really somewhat broken down. This is Madonna. Again, another breakdown. This company, the stock has been incredibly strong. That's why it's making the list. However, it'll fall off if it continues to be weak. But right now, we got some weakness in here. Stock dropped about 10% yesterday. They're involved in the vaccine, and a lot going on there. Nvidia, which is semiconductors, very good company, broke out. However, is somewhat breaking down, trying to hold that 10-day moving average. It is definitely a stock to keep an eye on. Twilio, which is a communication platform, stock has been incredibly strong. Actually held the 10-day moving average, which is a very positive sign. Shopify, which is a e-commerce software platform, stock has been strong. As you can see, though, all these stocks have pulled back because we're getting somewhat of a reversion to the mean. These stocks have been incredibly strong, and the S&P needed to play catch up. So we got the S&P back above the 200-day moving average. So the market's starting to broaden out a little bit here. The main group that's been really red hot has been things like the airlines, but most importantly, the bank stocks are showing some promise. So if you have any questions, let me know. Thank you very much.